And it's February the 7th, 2023, right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. I'm Ladi Williams, and it's about 3 days now to the February 10th deadline by the Central Bank of Nigeria to stop the old 1,000 Naira, 500 Naira, and 200 Naira notes from being legal tender. Remember, you can let us know how your experience is, getting the new Naira. I hope it's getting more easy. At this time, you can send us a message at businessmorning@channelstv.com, and we'll share your experiences. Meanwhile, Federal Capital Territory High Court has compelled the Central Bank of Nigeria and 27 commercial banks to go ahead with the full implementation of the Naira redesign policy, restraining President Muhammadu Buhari from further extending the deadline. About 14 political parties threatened to boycott elections if the Naira redesign cash withdrawal policies are cancelled. It's a developing story, and we'll definitely keep tracking that one. Let's go to the markets now. We'll see oil prices rose for a second straight session today. Brent crude futures rose about 82 cents to $81.81 per barrel in early trade, while the U.S. WTI crude futures, that rose 82 cents, about 1.11% to $74.93 per barrel. We'll drill down on drivers in that market later on the show. And Africa's first vertically integrated financial market infrastructure group, FMDQ, says its subsidiary, FMDQ Depository, has now become a member of the International Securities Services Association. In a statement issued yesterday, the company says the Central Securities Depository considers the approval as beneficial to the execution of its mandate to provide a safe depository for financial market assets. It would also provide a robust platform for collateral services and transfer agency, as well as facilitate effective settlement of capital market transactions, thereby reducing operational risk and improving efficiency. And as Nigeria's debt profile continues to rise, the Nigerian Investment Promotion Council has initiated steps to curtail future borrowings by boosting the country's foreign exchange earnings. According to the Executive Secretary of the Council, Saratu Umar, part of the initiative is to achieve the set goals through a master plan that is expected to open up more investment space for new investors, both foreign and local. She stresses that there's need for a vigorous campaign to promote the country's investment potential, as the country cannot continue to go for loans. Take a listen.
With over 178 IPAs worldwide competing to channel FDI to their different countries, a compelling imperative is established that NIPC ensures that Nigeria gets a fair share of this global market. This is especially important with the onset of the Africa Continental Free Trade Area, which is now in force, with Nigeria having deposited its instrument of ratification in December 2020. With this arrangement, where an investor can establish operation in a neighboring country or anywhere in Africa, and then set up trading outlets in Nigeria, we are to assert our position as a dominant regional player, and we must offer some or enhance our own investment drive.
As we count down to the general elections, there was a drop in Nigeria's inflation rate on a month-on-month basis in December 2022. As we look forward to the January 2023 inflation report, let's get a sense of what to expect as election spending hits up. Join us now is Tosi Oshukoya, CEO, Commercial Partners Asset Management. Join us via Zoom. Great to have you. Good morning.
Good morning, Ladi. How are you?
I'm fine, thank you. So let's throw it back a bit now. What has been the trend for inflation in different election cycles we've had in Nigeria?
Ladi, if you look at the election cycle between 2011, 2015, 2019, there hasn't been any empirical evidence with regards to how electioneering has caused or moved the needle when it comes to inflation. Inflation is primarily driven by, broadly speaking, by the food prices, the energy prices, and some other components. What has happened in previous cycles, you've seen inflation moderating between 10 and 11, and in some cases, maybe 12%. There was a particular election year in 2007 inflation was in single digits. So I really don't think that we're going to see much impact from electioneering this year impacting on inflation.
And also talking about inflation now, we know it's all about the Naira swap, swap at this time. But it looks like, at this time, Nigerians are finding it hard to get cash. Is this going to play into the inflation story that we're going to get for, say, January, February, and March?
No, I don't think so. I think what we're going to see as we move into February, obviously the January numbers haven't really come out. The January numbers, February numbers, and in the next few months, we will see moderation in inflation rate as a result of the base effects. What has happened with the cashless or the cash scarcity is due to the redesigning of the currency, right? The currency notes. I'm not sure that's going to impact on inflation. However, it's important for us to look at the month-on-month, variation or variance. What has happened between, November and December? Yes, in December we saw a moderation in inflation rates. I don't know why I keep saying interest rate.
Yeah, maybe because they're related.
Moderation in inflation rates from 21.4 to 21.3 is as a result of, the base effect. And the base effect will continue to kick in up until the first and second quarter. I think what we should be mindful of is the fact that the prices of goods and services haven't really moderated. Yes, you could say the base effect, which is really in terms of mathematical, logic, right? But in terms of the price of goods and services in the market, we haven't really seen moderation in that space. And you can validate that by looking at the month-on-month. The month-on-month, for instance, in energy has been 1.7, okay, increase compared between December and November. And I want to believe that that will continue in the subsequent months.
And we did get that big story yesterday with the court injunction restraining the president and the CBN governor from extending, the deadline for the swap. How do you see this? And do you see any negatives to the economy with this?
Ladi, I think clearly we will see negative, impacts as a result of the redesigning of, the currency notes. Yes, the CBN has genuine intention, right? But right now, the consequences, the unintended consequences that everybody is facing, particularly those that are very vulnerable, is very there. And you would agree with me. I mean, you've seen videos of, people in banking halls, fighting, just to get their monies out of the banking, vaults. And we need to be mindful of this hardship. So yes, according to section, 20 of CBN Act, that stipulates that the central bank is meant to give a reasonable timeline for the redesigning of the currency note. I don't think that the 3 months that they've given us, or 3 to 4 months they've given the public, is adequate.
Can we define reasonable? Can we define reasonable?
Ladi, I would think that, this has happened in countries, for instance, in India. I'm sure some of us have read about it. And we've seen the impact of, immediate or not given enough or adequate timeline for people to move their money away from from wherever they kept their money into the banking system. What I think they should have done is a gradual and systematic movement or a swap of this currency. But what has happened is not a gradual and systematic or steady swap. A 3-month window or a 4-month window, I think it's not enough. We're talking about a population of well over 200 million. We're talking about an informal sector. Most of those monies that the central bank had stated that they're outside of the banking sector, we're talking about 6 billion. Most of those monies are with the SMEs, those that are in the rural areas. And you need to cater for them. A lot of them are underbanked or underserved right now. They don't have a banking system. And you've said to them that you're giving them a window of 3 to 4 months for them to move their money away from wherever they tucked their money into the banking system. you should have made provision for infrastructure for them to even, or logistic, for them to even move their money into the banking system. I don't think that that has been provided. Yes, the central bank's intention, in all honesty, I think that is laudable. The fact that it's at high time we started moving into a cashless society, moving 6 billion, which is 2.7 trillion naira, $6 billion outside of the banking into the banking system, could potentially help or bode well for Nigeria in the long term. But in the short term, you must make provision for how that movement or the swap must be done in an orderly fashion. And I think that's where the problem is right now. And I think the timing is also very important. So if CBN is saying within the powers conferred on them, according to the provisions of Section 2 of 2007 CBN Act, they are doing everything within their powers because it is their responsibility for currency management, right? But there is also a stipulation that this must be done within an adequate time, a stipulated time, that will give room for people to do this without disruption of the economy. What has happened now is the economy is practically shutting down, Larry, practically shutting down. And if we are not careful, this is going to impact our GDP in Q1 and maybe even in Q2. Because what has happened right now is the informal sector that largely contributes, to the GDP, there's no business going on because people can't even settle for trades and services. The payment of exchange of goods and services in exchange for cash is not being done right now. Why? Because we don't have cash.
And one of the reasons, obviously, for this policy is to stop vote buying, as the elections approach. Do you think it's going to have any impact on that?
Yes, I think it's certainly going to have an impact on that. I don't know if the CBN's decision is politically driven, okay? But certainly it will have an impact on that. But again, don't forget that the politicians are also they have adaptive skills. If cash would not be provided, all right, for vote buying, I assume that they will look for non-cash ways of vote buying. There have been instances we've seen in the past, Larry, and I'm sure you've experienced where, provision of, food products is being given out as a way of compensating or votes, as a way of buying the votes of the public. So yes, in as much as this is going to limit the ability of the politicians or the capacity of the politicians to buy votes, which is a laudable idea, I think that the politicians will still bring the heart out of the, rabbit out of the heart.
And obviously, we know the CBN right now dealing with a lot, and obviously they still have inflation targets that they're trying to get to at some point. They've said that if inflation keeps going up, they will continue raising rates. So for the next, MPC meeting, what are you expecting? Do you see more aggressive rate hikes coupled with, electioneering and all that's going on at this time with getting cash? Well, how are you seeing that, driving the sentiment for the MPC?
I think, again, it's important for us to be mindful of the gap or the distance between when an announcement of NPR, increase in NPR or hiking rates has been made and when the effects will kick in. Okay, so right now, I think that the central bank has done almost 600 points, from when they started hiking rate. The 600 points, effect of the 600 point, I think will start kicking in, or it has started kicking in. And I think that will continue into, the foreseeable future. I think that it's important for them to even reevaluate the impact of the rate hikes they've done in the last, few meetings they've had. I think that it's important for them to reassess that situation before they do another hike. Otherwise, the hike might actually be counterproductive. Again, I've said a number of times that when you do, when you come out to announce hike, it's important for you to appraise the impact of that hike. For instance, the hike that the central bank has done right now is to encourage savings, okay, and investment. I'm not sure that we're beginning to see the impact of that right now, because what has happened is you have the cost push inflation, coming into the system, as opposed to you trying to, discourage the demand pool. The demand pool is as a result of money in the hands of everybody trying to buy, goods and services. But as a result of, the surplus liquidity, you want to discourage people's consumption and encourage investment. But that hasn't really happened. In fact, what has happened now with the currency redesign is consumption would wane because people don't have cash to even buy goods and services. Savings would also come down because people don't even have cash to save. So there is going to be a complete disruption. So in the next few months, if we do not address the issue with the currency redesigning, there will be a problem. So you might not see the benefits of the subsidy, the hikes that the central bank has done in previous meetings. You might not see the effects of that coming into play.
And how do you think international investors are seeing all of this, at this point, from, the extension, from the first deadline, that we have this injunction to not allow the CBN or the president, extend further? How do you think the international community is seeing this, and investors?
So, we've been talking and engaging with foreign investors, international communities, really. Obviously, they understand the peculiarity of the Nigerian economy. They also understand that there will certainly be a pushback because the effect of this currency design, trickles down to the common man on the streets, the vulnerable ones. They also understand that certainly central bank has to do something to ensure that, yes, the large chunk of funds outside of the banking system comes into the banking system. The truth about it is that in the medium to long term, we will begin to reap the benefits of this redesigning. If central banks successfully migrates those monies outside of the banking system into the banking system, your money supply is going to go. So that means that the banks would have money to lend out. If central bank, through moral suasion or through some other policy, propel or facilitate the banks to begin to lend, we will see more lending and lending into the SME space, which is the foundation of every economy. So what would happen in the medium to long term is you begin to see growth in GDP because the banking system now has a lot more money to play around with. Now you have a digital and cashless economy. I'm talking about the medium to long term. You have a digital and cashless economy. That means that you could actually also track currency transactions being done within a particular economy. The federal government could also benefit from this because all transactions, at least for now, will be monitored. That means that the tax evaders, could be monitored. That means that there will be bigger penetration of tax administration in this country. And of course, the federal government has been looking for how to increase their tax revenue. So that could be another window for them to increase their tax revenue. Larry, for me, there is a lot of benefits from this, but it has to be done systematically, gradually, and steadily. It cannot just be within a window of 3 to 4 months. That's where the problem is.
So people don't have maximum pain, even though we're getting those benefits. But we did get the inflation data, and we saw, month-to-month decline for the final quarter of 2022. And now the word disinflation is being thrown around, globally. What are you expecting? We're expecting January data that's about next week. What are you seeing?
Like I said before, I think the January data would see moderation in inflation rates, obviously because of the base effect. But the prices of goods and services will continue to soar. I don't think that would change. Okay, so we'll continue to enjoy the fact that inflation is moderating from 21% to maybe 20 and some 20 in previous months. But the base effect would wane at some point. And when that happens, reality will be dawn on us. I think that, and don't forget again, the fuel subsidy is a major factor in the basket. So H1, which is half year, we expect that yes, 3.3 trillion will be spent on fuel subsidy. But in H2, we expect that to be removed. If that is removed, that could bode well for Nigeria and could give us more moderation in inflation rate.
All right, I guess we'll leave it there now. Thank you so much, Satoshi Oshukoya, CEO, Commercial Partners Asset Management. It was great having your perspective today. Thank you.
You're welcome, Ladi.
All right, so we're talking election spending there, what to expect for inflation, inflation data for January. But after the break, we'll head on to the commodities market. That's in a moment. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning live on Channel Television. Let's head on to the commodities market now. With Citi benchmark index of international food commodity prices declined in January for the 10th consecutive month, according to the United Nations Food and Agriculture Organization. Let's talk to Tomi Maiwa now, analyst, financial directors company. Great to have you, Tomi. Morning.
Good morning. Thank you for having me, Ladi.
So it's the 10th consecutive monthly decline. Are we out of the woods yet?
Well, let me start by saying that prices actually declined. Global index price actually declined by about 18% from its peak in March, and that's because of the we saw an increase, a spike in grain price as at the start of the Russia-Ukraine war, and then because the Black Sea region was blocked, we saw grain price actually skyrocket. But we saw a decline in moderation in grain prices, starting from where, the war, the Black Sea region deal was signed by Russia and Ukraine. And, we saw some supplies there. And then recently, we've seen increased supply from Russia and from Australia. So that has been actually supporting the markets at the meantime in the short term. And I think in the short term, we're still going to see that moderation in prices because Russia will still continue to, at the short term, we'll still see that increased supply from Russia and from Australia. But on the long term, the war is still, on, and we don't know when it's going to end at the meantime. And then Ukraine is still actually supplying below what it used to do supply before, and so that's a long-term risk. Also, the weather forecast, it's possible that weather may not, the weather conditions may not be favorable for future harvests. So those are long-term risks actually. But on the short term, we're still going to see a tapering in grain prices.
It's quite interesting that most commodities that saw new highs in 2022 seem to be on that downward trend in
Yes,
2023.
for example,
but
we have wheat and then rice, corn, all of those actually feeding into that decline.
Well, let's hope that continues. But does this translate to lower food prices in Nigeria, and are there any risks ahead that could take global food prices up again?
Well, typically we should see that translate into lower prices in Nigeria. However, there are risks actually, considering the fact that last year we saw that the CBN could not supply forex to manufacturers as it used to do, probably 2021, about 40%, but now about manufacturers get about 18% of their request from the CBN now, and so they have to go to the parallel market to get the rest. And this is high risks because considering the fact that it's quite costly to get dollars from the parallel market, that's a high risk to prices in Nigeria. So what we're going to be saying is that irrespective of the decline in global pricing, if the Naira continue to remain under pressure, that would actually limit the impact of seeing that price. So manufacturers will continue to pricing their products based on the parallel markets.
All right,
and well, for risks in terms of global, like I mentioned earlier about the long-term risk, the war is still on, and so that will continue to keep price elevated, considering the fact that Ukraine is doing below what Ukraine is one of the top largest exporter of wheat, and so or other grain products, and considering the fact that they are still supplying less than what they should supply. So the market is still not fully supplied at the meantime. So that's a long-term risk.
I guess geopolitics, they are still on the front burner at this time. But let's look at the oil market now. See, oil prices have risen for a second straight day today. What's driving sentiment in the market right now?
Let me start by saying that I think about 3 months ago, we were talking about the zero COVID policy in China, and the fears of recession, all of that were actually leading to a bearish sentiment in the market. And, it was all bleak at that time. But now we've seen that China's economy is reopening. I think the International Energy Agency said that in 2023, China's demand will account for half of its, supply in 2023. So, and considering the fact that this reopening has led to an increase in flights, because the economy is reopening, they can move from one place to another. And also there's an increased demand. Don't forget that China is actually the second largest economy. So there's an increased demand for jet fuel because of the increase in traveling and all of that. So that is actually going to support demand in the even in the long term, considering the fact that zero COVID policy has been eliminated. And then there's been more optimism in the market, considering the fact, because we had seen that the recession that we were expecting was not really going to be as worse as we were expecting. So there's demand. The labor market is still tight in the US. So all of that are really still supporting the fact that there's still demand might remain resilient even in the long term.
And obviously, we still have everyone looking at that China demand to determine, where oil prices are going to go. But we also have LNG prices. That's trending up, at this point. Don't know if I can call it a trend yet. But how would this play into the disinflation narrative if these prices continue upward?
Like you said, it's because it rose to about $9 per MMBTU last year because of the outbreak of the war. Well, it's down by over 50%, and that has helped to actually reduce inflationary pressure, especially to the most exposed economy, which is the Europe. And so, well, I think the Europeans have actually been able to source for gas. Natural gas from other alternative sources. The fact that Russia gas cuts has actually led to increased investment in other alternative sources. So I think that they've been able to look for alternative sources. Although there are risks that the weather can be more cold. There are forecasts of cold weather in the future. So, but it's I think they've been able to find alternative sources that can help them to support, supply in the short term. So I think that might help to, tame price increase, in the short term. It might not go as high as what it was last year. So I think that's what we're going to see in 2023. So although we're going to inflation, it's if gas price actually increase significantly, then it will definitely raise the risk of inflation. There might be more, the inflationary pressure might increase again, and then the US Fed or the Bank of England might begin to tighten, rates again at an higher pace, actually. But in the short term, we think that gas price will actually remain, low short term.
And obviously, we know the global central bankers, all of them all ready to take rates even higher in 2023. But let's look at the Naira now. Even though the Naira has gained so much value, with us Nigerians, some people having to pay a lot to get cash from POS operators. But it's lost value to the dollar in the parallel market.
Well, let me start by saying there's a lot of uncertainties in the air. The deadline is supposed to be, or the deadline is on February 10th, and, nobody knows if they're going to shift it or not. And so people just have to, cover up and try to buy, dollars somewhere. And that's one of the reasons why we are saying, there's this fear, all of that, that we are seeing that panic buying, or should I say demand pressure in the parallel markets. And also there's increased liquidity. Considering the fact that if you check the banks opening position recently. We've been saying about about 1 trillion opening position, 500 billion opening position, despite the fact that the CBN is tightening its monetary policy. You know, it's raised its MPR by 100 basis points in its last meeting. And what we saw the next day was a decline, a sharp decline in its 1-year T-bill to about 4 points. That's quite far from what inflation is, which is about 21.34%. You know, there's that the fact that the 1-year T-bill is not even attractive. So that's not even bringing in, it's not helping him to mop up the liquidity in the system. So definitely, once you have excess liquidity, people would have to use, you know, consider that the interest rate is not attractive. They just have to look for other means by investing in dollars and all that. I think that is actually fueling the buying sentiment in the parallel market and also the depreciation that we're seeing.
But how's the cash scarcity? How's that impacting the domestic commodities market?
Well, what we've been seeing really now, it's price distortions, because if you have the new notes, you pay for the real price, and then if you're going to make a transfer, because you have to pay the POS when you want to withdraw, most retailers are actually pricing that into their commodity, especially when you want to pay transfer. So what we've been seeing is price distortions, and that's definitely not good in terms of allocating resources, because it's actually not good for a perfect market. And so that's what we're going to be saying. And then we don't even know the real price of what this is again, except, so it's really not, it's not comfortable for consumers. And the fact that their confidence is being eroded. You want to buy something and you cannot because you don't have cash. And so definitely what we even see again is a decline in aggregate demand. And if there's a decline in aggregate demand, the suppliers will not be able to supply the markets because they don't want to have too much inventory in their stock. So all of that will definitely filter into the formal sector. So it's quite it has serious risks.
All right, let's hope everyone gets the cash they need this time, and we can also make transfers easily without any issues. Thank you so much, Luatomi Mayowa, Analyst, Financial Derivatives Company. Thank you.
Thank you very much, Lenny.
All right, so yeah, there we have it. We see the commodities market definitely impacted. Let's look at other markets now. We have Anete coming in with the details at this time. So bullish close yesterday, but
yes,
in the fixed income market, what's happening there? FGN savings bond for February.
Yes, that FGN savings bond is a monthly exercise which the Debt Management Office had started a couple of years ago. I think about some 5 years ago now. So they've commenced the February edition of the monthly bond auction for February, and it's on 2 instruments. The first instrument is a 2-year savings bond due on February the 15th at 10.043% per annum, and it's actually worth 1,000 per unit. So it's targeted at low-income earners in the country, which is expected to give them the opportunity to support the federal government in funding the budget deficit. And then, of course, the second offer is a 3-year savings bond due on February the 15th, 2026, at an interest rate of 11.04%.
So I guess if you have all that money in your account, you can't, get the cash out. You might as well just buy the bond, I guess.
At the same time, because it's not everyone that can participate in the bonds market. So this is actually targeted at the people at the lower rung. So anybody at least 1,000 per unit is not too much, and the maximum is about 5,000.
Right.
Yes, exactly. So now, with that being said, let's take a look at the fixed income market for Monday, the start of the week, second week of February. For the bonds market, it was a bearish close for the market. It was with a mixed sentiment, but the bears had it, and that's because the average yield there, it inched higher by 1 basis point to 13%. But when you take a look at trading at the FMDQ securities market, what we have, the 22nd of January 2026 paper, it had the highest number of participants there, 6 deals, worth about 11.2 billion naira, and then the price high of 101.2%. Total number of deals carried out there was 27, worth about 25.82. Let's move over to the Treasury bills market. It was a bullish close for that market. Average yield there, it had contracted at the short end down by 4 basis points, and this because investors demanded the March 2025 paper, and then it expanded at the long end due to profit-taking activities on the April 2037 bonds paper. But take a look at the boards there. What you have there is just the 8th of June 2023 paper, which is later this year. Total number of deals carried out there was just 4. And that's also the case. No trading was on the central bank special bills, but when you take a look at the OMO market, average yield there, it contracted by 28 basis points to 1.7%. But what you have there on the board, the 14th of March 2023 paper had the highest attraction there. 45.31 billion naira was the value. The total number of deals carried out there was 8, but total cumulative is 12 number of deals worth 46.68 billion naira. So now that's it for that market. But tomorrow we will be expecting the primary market auction to be carried out tomorrow, and of course the analysts are also expecting that the central bank will conduct a mop-up of excess liquidity from the financial system. So we'll take a look at how that will affect that market. So now, with that being said, let's move over to the equities market, which has continued that bullish run, which is it has started the month. So far for the month, we're up by more than 6%. But for the close of Monday's trading session, we're up by 0.27%, which you can see the 54,000 level. That's another high for that market, 54,361.26 points for the index, all share index. And that was largely driven by investors' interest for MTN Nigeria, which contributed mostly to the market's sustained rally. And then it gained 81 billion naira. Now for the market's total value, that's the total value of equities listed on the NGX, nearly 30 trillion naira level. That's very, very high. So far, the highest we've seen so far for that market. Let's move over to the sectoral performance. Well, for sectoral performance, the banks were down. A couple of days ago, the banks were on the uptrend, but this time investors decided to take advantage of that, the gains that we had, especially on the tier 1 lenders there. So that's why we had the 0.41% pullback. But take a look at the board there. The oil and gas had the massive rally, 9.16% increase, while the insurance sector was up by 0.33%. And that's why that market, in addition to what MTN printed on the market, that's why the market went up. Now, in terms of activity, the activity, well, was kind of a slightly mixed picture. The value was down by a percentage, the 31.30%. It was down, but the value was up by more than 95%, and the number of deals more than 7% in terms of the activity that was carried out there. So now to give us more insight into the market. Okay, I understand we don't have our analysts to talk more about that market. But when you talk about the equities market, we're expecting that the fourth quarter 2022 and the full year 2022 financial results will be released, and that's expected to have an impact on the market. Of course, there will be some dividend announcements, so many investors will be keying into some of these announcements, will be reacting to how the market numbers turn out, and then of course we will be looking at how investors will be taking advantage of whether the market's gain is sustained, whether to make a pullback. Don't forget that we are in an election month, counting down to the election, but the market is still rallying. Let's see how that market sustains the rally. So now from the bigger listed securities market to the unlisted securities market, it had a pullback, 0.21% pullback at the close of Monday's trading session. So it is going down all the way from what it was previously to about 715.67% for the index point, while the market cap has drifted all the way from the 1 trillion naira level, which we saw sometime in 2022, to just 940.4 billion naira. For the activity there, the activity was not too good for the market. It was down. The activity was down by, the volume was down by 84.70%, which is what you see in contrast to what you had as at Monday, 24.46 million units of securities traded there. Value was just about a paltry 2.44 million naira, and where the number of deals carried out there for the securities was just 9 deals. For the stocks traded, it was just 3 stocks. Now, want to know the reason why the market had a pullback on Monday? It was because of Friesland Campina. It was the major reason why. The only loser there, which sorry about that. That's for the top trades. But for the market's decline, it's attributed to Friesland Campina, which made a pullback there, as you can see on your board, 1.45% decline. And that's had a very large impact on that market. So now we will be looking out for whether investors will continue to take profit on this securities market. But so far, the financial system, the macroeconomic environment is still of serious concern for investors. When you take a look at the inflation environment, also taking a look at the upcoming elections, so all of that is taking the investors' concerns and focus. So we'll be looking out for how they close for Tuesday,
exactly.
As we continue to count down.
So much for investors to contend with, you know, yes. At this point. You have to look at this, that.
So much
uncertainties
so much on
at
the
this
table,
point.
So much on your platter.
No, not easy making profits at this kind of time. Thank you so much, Anita. Anita there giving us the details from the market. Let's take some news now. In line with the central bank's financial inclusion policy, Hope Peers Bank Limited has unveiled a community financial inclusion policy driven by the Hope Wallet. During a press conference in Lagos to unveil the initiative, the managing director, Ogechi Otride, says it is targeted at promoting a cashless economy and ensuring that Nigerians, particularly the unbanked, perform transactions through electronic channels across the country. Take a listen.
Hope Payment Service Bank Limited, which prides itself as Nigeria's premier digital first bank, is leveraging evolving technology to further drive financial inclusion in line with the central bank policy. At a press conference to unveil a community financial inclusion initiative, the managing director of Hope Peers Bank, Ogechi Otride, emphasizes the importance of the Hope Wallet.
Your phone number is your account number, and it also serves as your ATM card. With your phone number, you can transfer funds, make payments and withdrawals at any POS, ATM machine, and web. The code is *569*9#. And also remember that Hope is giving away 500 Naira for every wallet account that is open.
The group head, corporate services of the bank, highlights the innovative edge of the initiative.
And the wallet is to make ease of transaction, to make it easy for you to transact, open and transact, for financial inclusion, for digital inclusion. You can transfer money from anywhere to the wallet. From any account in any bank, you can transfer money to the wallet. Same way you can transfer money from the wallet to any account in any bank. You can pay your bills, you can pay your utility bills, you can do everything that a normal person would want to do on a daily basis with the wallet.
Remember I said irrespective of your educational background or your status. So once you have your account, your phone number, and you walk up to an agent or you go to a device and you key it in, it will link it to the account number that you have. So you don't need to go about cramming that account number. You just need to know your phone number.
Hope Peers Bank, a Unified Payment Services Limited subsidiary, says the Hope Wallet demonstrates its belief that everyone should have access to financial and payment services with ease, irrespective of class.
Definitely all about making payments simpler at this point. Now, let's head on to other markets now. See what's happening with Bitcoin there. We'll see a downside correction continuing. But talking about sentiment, still greed at this point, 54 points, but tending more towards neutral at this point. We're seeing, that downward movement already playing on investor sentiment in the market. Let's look at the market cap at 1.07 trillion. We have an increase there. It's up about 0.74%, but volumes down this morning, 1.64% down. Bitcoin dominance, that's sitting at 41.47%. Eyes on this, because if Bitcoin dominance keeps going up, you know that alt season will be on break if that happens. Let's look at the price of Bitcoin, $22,940, trying to get back above the resistance. That's 23,000. That was supposed to be support, but it's looking like resistance at this point. It's up 0.63%, Volume traded in Bitcoin, $24.13 billion. Let's look at the price of Ethereum. Still holding strongly to that 1,600 level. Looks like it doesn't go below this if you keep monitoring that price. Up 0.51%. Volume traded $6.72 billion. Let's look at the top alts by market cap. See, it's mixed sentiment we're seeing there. With BNB, that's up 1.34%. Let's flip over to the top gainers count. Let's see what's happening. See, AGIX, that's one of the AI projects. We've seen the AI projects all around this top gainers list. With Fetch AI, that's up 26.75%. These have had incredible moves in January. They're trading, just traded about 6 cents in January, but with the whole AI narrative going on globally, we're seeing investors starting to take position with those AI projects. But now the question is, are you too late to this party? All right, let's bring in Gilbert Jupatana, financial market analyst. Hello, Gilbert. Hello, Gilbert.
Yes, good morning.
Good morning. Good morning, Gilbert. So, talking about the AI projects, in the crypto space, we're seeing them giving quite incredible gains. AGIX, that's up 35% this morning. Fetch AI, 26.75%. But from their January lows, they've gone up more than 100%, at this point. So obviously, we know how the narratives play out in the crypto space. We had the meme coin season, you had the metaverse, but now this is AI. But are investors late to this AI party?
Okay, when we want to look at how early or late investors are, we need to start looking at the market trend. First of all, there is a sentimental side to the game. There is also the technical side where we try to anticipate trend. But if you really look at the technicals, the trend is just beginning. And investors are not late to the party. We are not in the bull market yet. We are just having relief in prices and maybe possible sign of bottoming. So all one need is the right strategy to position himself into the new AI trend, just in anticipation of the bull market.
Come in there, then the prices start, going all the way down. But now, obviously, it's all about the Fed and central bankers. Obviously, still in 2023. It was about them in 2022, but they're still here. And Jerome Powell is expected to speak. I think that's about today. What effect will this have on the crypto market?
Okay, today's speech by Powell is quite anticipated, and there is already mixed sentiment coming from investors. When you look at last week's addition of about 517,000 jobs to the economy, people are scared that the Feds are going to go more aggressive in rate hike because the Fed share has kept reiterating again and again that they will keep increasing interest rates until inflation is down to about 2%. While the fear of a recession remain, I think one thing I would like to say is one way to keep inflation under control has always been manufacturing a recession, like we saw in the 1980s when inflation was about this high. We had two recessions as at that time that actually brought inflation down. But the debate whether the Feds could land us into a recession, like take us out of an inflation without a recession, is always point to an evidence of unemployment data. You don't get a recession until unemployment goes down. But we are entering into a phase of a new monetary policy, because one thing Powell keeps saying is that we are going to do whatever we can to put inflation under control. But he's telling us the economy is strong, GDP is growing, despite all of this. So I think, first of all, we are going to have two diverse sentiment. The first one is amidst the new interest rate hike that is coming, CPI data that will come on the 14th, sentiments are going to push us to test some technical lows, which speculators are already betting in certain supports. But I think this support is going to make a fresh buy low, a fresh buy zone that will gather momentum for Bitcoin price surge. But on the short term, we are going to have a negative sentiment on Powell's speech, because he's going to reiterate the fact that they are going to do anything to put the inflation under control. But yet, we still see that there are some macroeconomics that is still backing the fact that the Feds are rather switching more to a moderate interest rate hike.
So as it looks, the central bankers are definitely looking for, bad economic data and inflation still going down at this point. But who knows if we're going to see that. But we know the Fed chair did say that they'll keep hiking rates, if inflation, continues to rise. But they will also leave it there. So interest rates could stay high for most of 2023. Is it still wise for risk for investors to still look at risk assets? Is it a good bet at this point?
Oh, if you really look at what institutional investors are doing in the United States, you will notice the attention all of a sudden is shifting from assets that have government control into assets that are out of the control of the government. So yes, cryptocurrency are risk assets, but their interest will start shifting into Bitcoin, like more like solid crypto assets like Bitcoin. We'll also see interest into gold. So if it is a good bet for investors, it depends now on the investor strategy and what they need, their outcome, because I think the dollar is already approaching its peak of its bull market, whereas the cryptocurrency market and most risk-on assets at this moment are already reaching their bottom. Most of them could be technically out of the bear market, but this does not mean it's a bull market, but they are just facing fresh air to show there have been capitulation somewhat our bottom has been in.
All right, we'll keep watching out for those bottoms. Thank you so much, Gilbert Jukwata, financial market analyst. Watching out for Powell later on today. Thank you.
Yes, thanks for having me.
All right, so as I said before, top 5 gainers there. We're seeing the AI projects. They're taking the shine at this point. Let's look at the top losers counter now. We see Leo token there. That's topping that count. It's down 6.65%. And we see Phantom giving up, some of those gains. We saw had a good run from 2022. The ending there was trading as low as 16 cents, but did get to about 60 cents. But seeing pull back there, could be profit taking or maybe another trend downward. And we see BAT and SHIB, meme coin there. That's down 3.75%. Well, that's it for the markets today. And that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch all of this again on our YouTube channel. Flip over to YouTube, search for Channels Television, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Enjoy your day.